Hey guys, what's up? Stock Retail coming back to you. Now that Q3 is over and we've had a day or two to digest the numbers, wanted to go ahead and give my Q3 earnings forecast. A little early here because the actual earnings call won't come until probably, I don't know, first, second week of November. We'll get an announcement from AMC at some point. But for me, the numbers won't really change from here. So I just thought I could already share them. And part of it even is a response. Sometimes I like to jokingly tell the shorts, they better leave me alone because when they poke the hornet's nest, I get annoyed and then I get a little more activated. And yesterday, if you didn't see the video yesterday, kind of discussed how we have improved our earnings on the back of reducing our borrowing costs. So that is cash that stays in the bank. And so take a look at that video if you didn't see and you want to know in a lot more detail how things have been going on AMC's debt and how much money we've been saving on that. We'll touch on that here. But what happened too is some short, got on, and I've since removed the comment because I tend to not allow people to try to use, negative sentiment influencing on my channel and on my Twitter feed. But sometimes I'll leave them just to put someone in their place or give them a spanking. I don't mind pushing back on the shorts a little. But somebody yesterday said something that just made me go, you know what? I'm just going to get this done and get this in your guys' hands so that those of you who are real and want information or want to share information with your friends can be armed with, what I call kind of anti-FUD or let's, facts over FUD. I like to say, let's speak truth. So that's why I'm here back to back. And you can see the title. I have said this for a long time. So to most of you, if you followed me for a minute, it's probably no surprise. Q3, I'm just saying it's a record, but how big? And what I want to clarify there too is a record for what I call the ape era or the retail era. So we're talking kind of post 2019. Let's just kind of go through, well, what happened this quarter, and then we'll set up the details and I'll go through that. As I go through this, I often bring up, because I just tend to get new followers, my background is, I have, some professional background in forecasting. I led planning and forecasting teams that were forecasting over $2 billion of revenue a year for a very large company that was across, it was like 9 categories across 15 countries. So I know a thing or two about forecasting, but if you've been around, you know what I'm about to say. There is a saying in forecasting, which is, if you have a forecast, it's wrong. So I just want to caution everyone as I go through these numbers, and you'll probably hear me put forward quite a few disclaimers, but what I'm sharing with you is a forecast, and it's a guy on the internet's point of view. So you're going to have to question this, and you are not going to be able to hold me to this when AMC comes out with earnings, and there are some parts that I got wrong. Let's just hope that I can keep my past accuracy. Another thing, if you're new to my channel or following me, I have been in the very high 90% of accuracy on AMC earnings forecasts. I have been beating Wall Street. One thing I'll say, and then let's just go ahead and go through all of this. I've said a few times it's easier to forecast the box office itself than it is to forecast earnings. There's just more details and more sort of puts and takes or pluses and minuses in earnings, things that the management team can decide on that will impact us. And then if you go even farther, forecasting actual cash flows is even harder. So the more detailed you get, the more likely your forecast is wrong. But, I've had a track record again of certainly beating Wall Street pretty much every quarter for, I don't know, 2 years. So that's why I kind of share this stuff more vocally these days. Let's take a look at a few things about Q3. So obviously we had some big movies, and this was something I had said in one of my first videos all the way back in fall of 2022. I had said, hey, we're going to get more movies. We're going to get more big movies. So a little bit of a check-in on how that's going. Well, you can see in 2023, we had 6 movies in this same quarter. I'm just comparing Q3 to Q3. So just last year, $600 million plus movies at the domestic box office. 6 movies that got to 9 digits. This year we had 7. So all right, we've increased the amount of these big movies, moving in the right direction on these real big movies that bring a lot of people. And by the way, it's not all about just big movies, right? But there's a halo effect. If someone comes and sees a big movie, they see a trailer they like for another movie or a poster or something, maybe they decide to come back. So that's kind of nice too. And then last year we only had 2 movies that broke $200 million in the quarter. This time we doubled that. We had 4 movies that broke $200 million, went above that in the quarter. So nice quarter for the big movies, but also we had quite a few, mid-sized movies. In fact, one of those was Coraline. You saw that that was kind of a re-release, and man, was that successful. That did, I think, $33 million in the quarter. By itself, that's a big movie. And this was a movie that had already been out for a long time. So that was pretty cool to see. Clearly, an audience was excited about that one. And so just the point that AMC, I'm showing you things that are all going to show up in my forecast. So there's not just the box office, but there's sort of alternative offerings, starting to come out. Now, Coraline, that was I did count that in the box office number. But what doesn't show up in the box office number right now is Usher. I don't think that concert was all that big. We would have heard a lot more news if it was big, but it's not zero. And so just a reminder that AMC has distribution, and we probably are going to see more of that. And then AMC this quarter had the Olympics shown in some theaters as well. And so that would have drawn in a few more attendees, and some food and beverage sales and some things like that. So again, not very big necessarily, but it's just not zero. So there's other things going on that you're starting to see out there that are helping our numbers. A few other miscellaneous items before we kind of just turn this into a numbers video. Reminder that we had for a period of time sellouts on candy. Now, at one point, I know there were some people who really wished that we were not out of stock. I can understand that because being in stock means more sales. But the flip side of that, let's call it silver lining of that, is selling out meant we were selling a lot of candy. And that was in this quarter, right? So when the summer blockbusters in particular were hitting, AMC got a lot of attendance and sold a lot of candy. And so that is in our numbers. That we're going to find out just how well that did. To be clear, so far, Adam and team have not reported on sort of popcorn as its own line item. So we don't know the real number of what that's contributing to the company, and the same for candy. But again, it's just a non-zero item. We know that added to earnings for AMC, and so that was a real positive in the quarter. And then merch, Adam and Sean had talked about merch numbers. I'm just kind of showing for fun the Despicable Me merch here down at the bottom right. We know that there were, again, these large movies tend to push merchandise sales. And then let's not forget that AMC has an online presence now. You can go to AMC and shop for merch online as well. And sometimes that's even older stuff. I saw some Lord of the Rings stuff out there this quarter. It's kind of fun. I know some of you have started posting about Halloween costumes even that are being sold on AMC's website. So, any sales there that's a non-zero is adding to our earnings. And then we all saw the kind of sort of viral take on the Sandworm Slayer, the cocktail for Beetlejuice. And so I just wanted to bring that one up because that was kind of funny. Some people were trying to troll us over the price of that. Some were just having fun with it. But I suppose in the spirit of no publicity is bad publicity, that's not always true. But in this case, I think it was kind of cool that we saw people maybe make it a little more into the consciousness of the country that there's fun cocktails offered for a lot of these movies. And so that's adding to revenues as well and increasing sort of the food and beverage sales. So all of that is kind of wrapped up into our results this quarter and a lot of other stuff. A little bit of history, sort of a did you know. Let's look at sort of Q3 history and compare it to the box office we just finished. So you can see on the left, this is a website many apes use. I use it myself, Box Office Mojo. You can go see various views, look at specific movie results in the past. You can look at the box office results within a quarter, these kinds of things. So you can see we landed at 2.66 billion at the domestic box office. If you're new to me, one thing to note, I'm tracking the domestic box office pretty closely, but that's because then I've sort of figured out through history how to extrapolate that into AMC's global revenues. So AMC, of course, has a large presence in Europe and a few other spots, but in particular Europe outside of the United States. And so when I talk about the domestic box office, I just want you to know I'll still give you AMC's earnings results as a global business. But domestic box office just helps us kind of track the health of the industry, helps me get to some forecasts. So that works. All right, so kind of compared to what we just saw. So we saw this 2.66 billion. You can see in 2018 here at the bottom, it was a little higher. So, and I'm just noting for you that box office at the domestic box office was $74 million bigger. on that $74 million bigger, that 2.73. AMC had a revenue of 1.4 billion that quarter, and earnings of 22 million. In 2019, you can see the box office was even bigger, about $150 million bigger than the box office we just finished. AMC had a little bit lower revenue that quarter, 1.3, and you can see earnings were negative. I suppose on that drop in earnings, probably there was some competition that quarter. I don't know. I wasn't tracking AMC in 2019. We all had a different world back then. So earnings, though, were a minus 55. And so, by the way, this already kind of proves the thesis a little bit. So you can see in 2023, last year, this 2.65. So we have an actual to look at. We have real results to look at from last year. $2.65 billion domestic box office. So that's smaller than both 17 and 18, and yet had a positive earnings. And by the way, this note at the bottom, cash flows were positive. File that away because you're going to want to remember that for sort of anti-FUD, and I'm going to talk about it again before the end of this video, that last year we have a real result at a smaller box office than what we just saw, and at a smaller box office than in 18 and 19, where we had positive earnings and we had positive cash flows. So it's already been proven. The thesis is proven. And I'm going to show you how we're actually a lot better now even than just a year ago. And so you can already kind of guess where this video is going to go, that if we've improved a whole lot of items. And by the way, again, if you're new, I've got a fundamentals playlist. Please go check that out. You will see, I will walk through in those in great detail. I have 2 master's degrees in business. I know how to look at income statements and balance sheets. So I walk you through specifically so that there's no trust me bros here, so that you can see in AMC's actual filed results the history of what they've been doing. And I'm showing you charts over time on all kinds of items, like how much are people paying per ticket, how much are people buying in food and beverage when they come, these kinds of things that will show you why I get to these forecasts I've got. So you can just see, though, if you don't want all that detail, it's really easy to see at the top level. In 2023, that was the Barbenheimer quarter. We delivered positive cash flow, positive earnings on a smaller box office than pre-COVID. I mean, you can almost stop there. You know where this company's going. But let's go through the details for those who want to know, and for the shorts who want to find something to try to troll me on. All right, so I'm going to lead up to the bottom line number. I'm going to give you that for Q3, so you can try to decide how you feel about that. And I want to just show you all of what's in that number. And so really, in a way, you can just think, notice that the box office last year to this year is very similar. So you can just decide, all right, if the box office is pretty much the same, just a little bit different, 0.5% up, then all right, what changed in AMC's underlying business that takes us up or down from there? So you can see I'm saying that right off the bat. Box office, I called it flat plus because it's a little bit up, $14 million bigger at the domestic box office than last year. And so I'm just going to show you what are the bigger items. I'm not showing you every single item I forecast. I've shared with you guys before. I have spreadsheets where I look at every single quarter all the way back to 2018. That's why I had those numbers a minute ago. I'm not going to show you all of them, but I'll show you the sort of big movers. What are the things that really, I'll call it, are material, that are impacting us plus or minus year over year. And so that way, let me go back real quick. If you just, again, you know that last year's box office was very similar. We made $12 million at the bottom line earnings. We had positive cash flows that were quite a bit bigger than that. So then, what kind of took us up or down from last year, and that gives us a bottom line this year. All right, so on admissions, that result last year, there was actually a dip in that quarter that seems to be kind of a one-time-ish dip. There was just some things going on in terms of a discount consumer. I think there was some promotional weeks, some different things that happened last year that we've not seen in recent quarters. So what you want to take away from this is, in my forecast, if you look at the amount people were paying per person for tickets, I have forecasted us at the rate that recent quarters have been at. So I'm not counting the same dip as last year. So if last year, I'm going to make this up, but I think it's close. If last year was like $10.86 a person for tickets when they came to AMC, all of the recent quarters are well north of $11. They're like $11.20 plus cents, $11.30 plus cents. And so I have forecasted, you can see, an increase of 4% per person. So that's back to that 1120, 1130 kind of number. And that matches the last like 3 quarters, I think. And some were even higher. We had like when we had the Taylor Swift quarter, that pushed ticket sales up a little because Taylor Swift tickets were $15 a piece. So there's some things like that that I take into account. But certainly, I believe that we're going to see a per person admissions revenue higher than last year. And so then you can see on a slightly bigger box office and then more per person, AMC's revenue going up $31 million just on admissions year over year. So that's one of the big movers in my forecast. So now you can just question, you can say, well, I totally disagree with you, retail, or okay, that makes a lot of sense to me. And I just mainly want you to take away, if the last 3 quarters have shown a trend, then I'm just sort of staying on roughly that trend. Other than, like I said, I'm not as high as the quarter when we had Taylor. Food and beverage is the same thing. So if you were to look at the results, and again, you can find this in AMC's filings. All I do is I just take the numbers straight from them. These are filed with the SEC. These are public numbers. You would see the same dip basically on this quarter last year. And so I'm saying, nope, I don't think that dip holds. I think that was sort of a one-off for that quarter. Again, I believe we brought in, there were just some big promotional, I think a whole week at one point was a big promotion. And so I think it brought in just a different consumer, a discount consumer, and that's fine. We needed it at the time. You can see it drove profits. But I believe that the last 9 months is long enough to call it a trend, and I believe it is. Then people are spending, and oh, by the way, and for many of you, you would know, when I call that a dip, it's not just the last 9 months we've been at a higher level. It was for like a whole year before that. So if you really say if 21 out of the last 24 months is a trend and those 3 months were a temporary dip, then I think I can give you some confidence on this forecast that people are spending more money this quarter than the same quarter last year. And so here you can see I've got us up 12% a person. That's versus last year, but I've got us pretty even to the last 9 months. And that adds alone $57 million just in more food and beverage spending. And I will tell you, I just took my family, we went and saw Wild Robot, and, my daughter got the pretzels. Oh man, I forgot my son got a box of Milk Duds. They both got a drink. I got a beer. We got a big popcorn to share between my wife and I. Like, you can just hear people are spending money on food and beverage, and AMC has a significantly expanded offering. And then don't sleep on the fact that AMC now has partnered with Uber nationally. I just ordered some food to my house the other day just to try it out. And because honestly, I think the chicken strips are some of the best around. And that's going to add to revenues too. So food and beverage spending, I just believe, is up across the board versus last year, mainly because of that dip. And that is a significant increase in revenue. So you can see I'm leading to a place where you're going to see this, why I'm saying we're at records for the retail era. Popcorn, candy, and distribution. So notice the note here that it says net incremental. If you're not kind of from the world of business, most of you probably know, but just in case, let's make sure we're all on the same page. Net means like after expenses. So if you bring in gross revenues, then you take your expenses out and you're left with net earnings. And so I've talked to you guys before about gross to net. Adam's called it operational leverage. AMC has a lot of operational leverage, but that's kind of a different topic we can deep dive on more sometime. And again, go back to those fundamentals videos. I do hit on that in a few of those to just explain that. But main point is, if I give you kind of a net number of, last year at this time we had barely rolled out popcorn. Since then we've expanded into, Kroger and Amazon and more Walmart doors than we had in this quarter last year, and online. And so we're at like 8,000 points of distribution, and we've had a year's time to grow in sort of brand presence and sort of be in the mind of consumers and be in consumers' paths. You can tell I come from a little bit of a brand background, so that's why I use this language about being in a consumer's path and brand mind, presence and stuff like this. But the point is, we've got more brand recognition and we've got more distribution. These are the ways you sell more product. On top of that, we have added candy. We did not have candy last year. It was a 0 in this quarter. And we've added distribution. Again, I don't think Usher was all that big this quarter, but it wasn't zero. And so I'm giving you an incremental number, and you notice at the far right, I've got a question mark next to this. I'm just, in humility telling you guys, I really don't know what this number is. Um, your guess is probably as good as mine. I guess one other thing I didn't highlight enough when I say I talked to you about net, but I also said net incremental. So this just means what are we adding? What's different than last year? Like with candy, if you sold, let's say, chocolate covered pretzels from some other, like Nestle or somebody, and now or Hershey's, and now you're selling chocolate covered pretzels from AMC. The, not all of that revenue is what's called incremental. It's not all over and above last year. But remember, because we're selling our own candy now in those, the raisins, the pretzels, the almonds, the peanuts, we keep more profit in house. So there is an incremental add. So that's what I'm trying to guess at for candy is what's the increment. And then also there's just the fact that all of you apes, I see you posting on I always want to call it Twitter still, but anyway, on X, I'll see some of you buying 10 and 20 bags of candy. So I would imagine we're selling more than we did this time last year. So there's an increment in terms of we're selling more, and there's an increment in terms of we're keeping more percent. So I've just got a wild guess across candy, distribution, and popcorn that maybe we've added $7 million versus last year. So again, you could just say, hey, you're crazy. We're not going to add that much. Take that out of the bottom line number I give you here in a minute. Or you're crazy, it's way more than that. Add that to the bottom line number. So if I give you transparency on where my numbers come from, then you can sort of plus minus them in your own head too after I give you that bottom line. All right, so film costs. Now we got to look at sort of there's not all pluses, there's some minuses. And this is where Shorty cannot troll me because I'm factoring in expenses too. AMC pays a percent of admissions back to the studios. We've talked about that here. I'm sure most of you guys are aware. Obviously, if someone makes a movie, they want to make a profit on it too. So they take a cut of our ticket sales. Well, last year, this quarter, I think AMC paid 49.9% of admissions back to studios. I've actually got it just above that in my forecast, I believe. So I basically am telling you I'm keeping the same rate as last year. I think I made it just a touch higher. And so because even if it's the same rate, remember back up here, I told you we have $31 million more admissions. So at the same percent, we're going to pay more back to the studios. So we're paying 4% more than last year, and I've got us on a $15 million increase on what we're sending back to the studio. So we don't get to keep all this 31 up here. We're sending half of it back, which makes sense. I just told you 49.9%. That's basically 50. We're sending half of it back, right? So that kind of helps you see that. Food and beverage and operating expenses. So I call it OPEX. That's just because I come from the world of business. That's just short for operating expense. So I suppose this is OPEX, operating expenses. But anyway, I've got us at a similar rate to last year. Now, here's actually a hopeful tone, and I'm going to go through these bullets at the bottom. But if you're I don't know, reading ahead, you're going to see. I've noticed because of the way that I forecast, I do sort of operating expense a little bit as a percent of the box office. I kind of just have figured out a function over time of how much our operating expenses are going to be in sort of relationship to the box office. And you can imagine, I've told you guys about fixed costs versus variable costs, right? Let's say you have a manager at a property. It makes sense. AMC's got a manager, a general manager at that property. If they show one movie or if they show 500 movies, they have that one manager. Well, you can imagine if we have more movies, or especially if we have more people coming to see movies, then the cost of that manager as a percent of our revenues starts to go down, right? And that's that operational efficiency that we've talked about, or what I've called gross to net. And so the higher the box office, the lower that percent of operating expense becomes. It starts to become real profitable for AMC to be in business, is what you ought to be hearing. And so I've actually kept, because the box office was about the same as last year, I've kept us at a very similar operating expense rate. I increased it a little because now if we're running popcorn and candy and distribution, there's some kind of management overhead we're going to see in that. You got to have people to run the business, right? That's just normal. And you probably got some day-to-day expenses, in those business lines. And so just bottom line, you can see between food and beverage expenses, that's just over time. I can see our margins on food and beverage, because AMC publishes both the food and beverage revenue and the food and beverage expense. You can go see this sometime. So I've increased that just a touch for inflation. But by the way, generally inflation has been our friend in that food and beverage revenues are going up either commensurate or in a lot of cases even faster than food and beverage expenses. But just in case, I've gone ahead and been a little bit conservative, said our expenses go up, and you can see that's costing us $30 million. So I'm including a hit of increased expenses in between OpEx and food and beverage. Okay, depreciation. Oh, and so what I'm just really saying is I'm actually, of any of these lines, I'm probably the most cautious about the admissions line and the food and beverage line. What if we have less people? I've got to use sort of a total attendance as well. I'm probably the most cautious on those, and I'm the most optimistic on the operating expense. I'm hopeful that Adam and team will continue a trend that they've shown us of they've been tightening that. So let's just see, but I just want to be, I don't know, realistic with you. I don't quite want to call it conservative, but I want to be realistic. All right, so on depreciation and amortization, I've shared with you, if you don't know, that is a non-cash expense. So that does not come out of our cash flows. So that's where you'll start to see earnings and cash are not the same number. And that's a positive, guys. That just means we're reducing our earnings, which is going to reduce the taxes we pay, but it's not a cash expense. Now, this relates to, so I've got two items here, right? So I've got depreciation and amortization, then I'll talk to you about borrowing costs. So I'm on depreciation and amortization right now. It relates to your capital expenses. When you invest in longer term investments and build outs, then you can depreciate these. It's basically a way of encouraging investment. And I've kind of talked about that before, so I won't belabor the point. But because AMC's had to be tight on cash, you've heard Adam and Sean talk about really managing that carefully. I believe we've kept capital expenses lower than probably what's normal for this business. And the reason I bring that up, so I can see quarter after quarter after quarter, a decline in the depreciation and amortization line. And so I'm just sort of bringing that out and continuing that decline a little bit. So that improves our earnings. But let's say Adam and Sean come out and they say, hey, this last quarter we made a significant amount of investments and we've started depreciating that or something. Well, I'm not going to have been able to forecast that. It'll be great. Frankly, I'll be excited because it's going to be them saying, hey, we've started putting in lasers, or we've started improving the seats in certain theaters, or even we've got more construction we're doing, or whatever. I think that is, I've said many times, strategic investment in theory is going to be value creation. But so what I'm just saying here is I could get this number wrong on the depreciation and amortization line if they start investing more and being able to depreciate more. But for now, I'm just having that at the rate it's been sort of declining. And the reason for that too is you end, well, actually there's two big reasons in my mind for AMC. One is if you don't invest for a while, you can't depreciate an asset forever. And if you use some kind of declining method, I know a couple accountants who follow me, so you guys know, but there's straight line and there's declining and accelerating. There's different ways of depreciating an asset. We're not going to get into that on this channel. I don't think it's worth us all understanding too deeply on that. But the point is, that's partly why depreciation's probably been going down, is some assets have ended their sort of useful life of being able to depreciate, and some are probably on some declining table or something. Then the other reason is, we've sold some properties. If you sell those properties, let's say you were depreciating a projector, well, you don't own that projector anymore. And so there's less assets to depreciate. So that's probably been part of the issue too. All in all, that's an improvement to earnings. That's all you need to know in this video. Borrowing costs, I will fly by that because the last video before this, besides one little mini, like I had to correct a statement, the last big video before this was all about how much money we've saved on our borrowing costs. Roughly, we're saving like $50 million a year just in shifts over the last few months. And if I went back the whole last year, we've paid down a bunch of debt too. And so we're saving a significant amount of money per quarter on borrowing. So you can see, combine those two items, add $24 million to our earnings this year versus last year. Taxes. So because we're making more of a profit, we did pay taxes this quarter last year because we were profitable. I think it was about $2 million. We're going to pay, I believe, then even more taxes. So again, I just want you to know I'm accounting for all of this. I'm saying we're going to pay $10 million more than last year. And you can see I've like 4x'd, more than 4x'd our taxes. You know, and a minus here means an expense went up. So we're keeping less money. So I have counted on our taxes going up. That would be a line that I am just going to tell you. I'm making a wild guess. I have no idea what our effective tax rate really is when we're making a profit because we don't have enough history on that the last few years. This has been a turnaround story. So I could have gotten taxes wrong. We're going to have to see that in the earnings. But so that you know, I've counted on an increase of taxes $10 million more than last year. All right. So those few notes, I told you that I'm hopeful we'll see operating efficiencies, operating expense improvements over last year. That would be nice, but I didn't really count on that. I'm hoping that, oh, well, not hoping. I talked to you all about depreciation and amortization, so I'll skip that one. On admissions, not admissions, admissions and attendance impact. Adam and Sean shared with us in the last quarterly review that there is a competitor in the UK who has been running at a loss, basically trying to bring traffic in their door through really, really, really discounted tickets, and it impacted our market share over there. So that impacts attendance, and I have to use attendance forecasts in my calculations of just how much are we bringing in admissions and how much are we bringing in food and beverage. So if we see, let's say, maybe that competitor, couldn't. Adam had said he did not believe that business model was sustainable. At some point, they'll stop doing that. If we're gaining any market share back in the UK in particular, then perhaps we'll see some other improvements here. Or maybe I have over assumed, how fast we'll get some of those consumers back. And so that could be a drain on my numbers. So just want you to know that's something else to think about in these forecasts. And then on the borrowing costs, I have to guess a little bit when we have these announcements of we've paid down debt, or when we saw the rate cuts, and Adam said the 50 basis point rate cut saves us 10 million a year. I have to guess the timing of how much of that falls within a quarter. Now, for Q4, I know we'll have paid off, like say the $153 million of debt we just paid off. I know that was going into Q4, so I can kind of count on the savings from all of that in Q4. As a forward view, I can count it and bake it into the cake, so to speak, or bake it into the forecast. In Q3, I'm just telling you on this borrowing cost, that's one more thing I could get wrong. Just how much of the savings do we have? If anything, I think that means we could see an improvement over my number. So hopefully I'm not, overhyping you on that. All right, so enough about all those numbers. So bottom line, I'm coming back to this slide that we started with. On a lower box office than either 18 or 19, AMC is achieving actually now higher earnings than then. So remember, Adam and Sean have told you, and it was one of my thesis points, like the main thesis. You can go back to videos I made in the fall of 2022, or if you followed me on X, you can go all the way back to early 2021. The main thesis was I'm watching this management team improve the fundamentals of AMC to the point where it will be more profitable than pre-COVID. And we are seeing that prove out. This quarter proves the thesis. I'm talking proves it. And so I think I've got that bottom line for you coming. Yeah, I do. I apologize. So I was jumping ahead. Oh, no, here it is. Here we go, guys. I just threw this together right before I recorded it. So sometimes I'll forget what I have on which slide. 2024 box office. So total revenue, you can see I've got higher revenue than all of these. Now, again, think through. We've got candy, we've got distribution, we've got popcorn. Per person ticket prices are way up. Go review my fundamentals videos. It will show you all of that. Per person food and beverage is way up versus pre-COVID. Way up, guys, like way, way up on those things. I think food and beverage is up 20% per person, and ticket prices is up, man, I don't want to quote. I just told someone in a comment yesterday too, so I should remember this. But I don't know, maybe even 50% or at least 40% a person. I think probably 40%. And so I'm telling you, bottom line, earnings of $80 million. I've had that number for quite a while. I had said that number months ago, and then I started to, for a little while, even I bought into the hype when Deadpool and Wolverine and Inside Out and Despicable Me and Twisters were all overperforming. But then, we had a few movies get pulled and bumped out to other quarters. We had one or two movies that kind of didn't perform where I'd hoped they would. And so, like Borderlands, jeez, that was a flop. I'm sorry, if you're involved with that studio and you're listening, I don't mean that to be insulting, but certainly that did not work out and was way below my forecast. I got that one wrong. Anyway, so if you've watched me long enough, you would have seen I said 80 million. Probably should have stuck with it because in the middle of the quarter, I started saying, "Hey, could we even get to 100?" Now I'm back at 80. I'm just going to tell you guys that while that is my number, and I really tried to look in my spreadsheets and just question myself before I shared this with you, um, gosh, that feels so high that it's even I'm wondering, okay, what might I have done wrong here? So you're just not going to be able to take this number and run with it. I can't, in any way, shape, or form promise you this number. We could have expenses that I just didn't see. And so let's wait for the earnings forecast in November. But, I'll tell you, even if I'm like way, way, way off, then that we've hit an all-time retail era record. And I can say with some high confidence that we beat this, 2018 number as well. And, look at what I'm reminding you in terms of the box office. So in 2018, that box office was almost $100 million bigger than this quarter. And I'm telling you that we have beat that at the bottom line. So AMC is more profitable on a smaller box office. And, what I always say is then think about what's coming. So let's talk about that a little bit. Because, on the last video, it was kind of like a celebratory video of, hey, AMC just in the last couple months has reduced borrowing costs by $50 million a year. That adds straight to the bottom line, $50 million a year improvement to the bottom line. And in the meanwhile, your stock has not added any market cap. And I was trying to help you guys see that, let's say we had a price to earnings of 25 years. That $50 million a year of savings, you should multiply that by 25 and then divide that into all the shares. And our stock should have gone up by that. So even with dilution, we should be way up. And when you're not seeing improved earnings priced into the stock, it ought to make you question why. Right? So many of us believe there's heavy, heavy manipulation on this stock. And you can basically just prove it with math. I mean, if AMC's earnings are radically improved and yet the stock and the market capitalization is not reflecting that, and you can find again in those fundamentals videos, I've got a whole one on price to sales and as an example. So, review price to sales, price to earnings. Think about standard math on stocks and why is that not being reflected in AMC? And I think you know the answer. And so on that last video, I was celebrating that we had $50 million a year in savings. And I got several comments, and now I kind of wish I'd have left them so that you could go see them. Maybe I'll try to do that in the future a couple times. It's just that, it's been 4 years and I pretty much have an itchy rash every time shorts try to use my posts to sway negative sentiment because they want to manage the algos. The algos hear us, guys. I'm telling you, algorithms listen. They listen for social sentiment. And so anytime, I can tell you right now, anytime I have a video that gets more views quickly, the bots come out and they jump all over it. So a lot of times I just swat them like flies. And rather than, you can argue in circles all day with a short, or you can just say, you know what, I don't have time for you. And I'll take them off sometimes. Now they're going to accuse me of, oh, this guy, he's too scared of us. He won't even deal with us. But I talk to you guys. I don't feel like I need to talk to distorters. And so I am acknowledging it right here. So a short got on my video yesterday about saving the borrowing costs. And they tried to say, oh, you're so stupid. You're celebrating $50 million a year improvement, but AMC's still losing $300 million a year. Guys, that's insane. Come back to this. Okay. The third quarter last year, we were profitable. Since then, I can point you to line item by line item of what has improved. Again, I'm sorry to pump myself, but go look at those fundamentals videos so that you will see it's not hype. It's literally in the AMC results. It's established. The only thing that happened between last year and this year was what? The strike, right? So you had several quarters that were very depressed because of the strike. But when the movies are there, now, twice in a row, when we've been above $2.5 billion, let's say at the box office. Actually, if I showed you Q2 of last year, was net earnings, positive net earnings as well. When we've been above $2.5 billion at the box office, we have had positive earnings. And I'm actually telling you it's getting better. We don't even necessarily need to keep hitting that number because of all the improvements. So if we're, watch in November, let's see what the number is. Again, even if I'm wrong, what this bottom line number is, and watch the cash flow number carefully too. And when you watch the cash impact, the EBITDA, and the bottom line earnings, and you see it is positive, here's what shorts are trying to do. When they say we're losing 300 million a year, guys, that's so 2022 and maybe 2023 to a certain extent. That is not our future. And so I've told you since I think I started using this language this March. So for what are we at? Like 7 months now, I've been telling you because I saw this coming. I saw this quarter coming. I saw the end of the strike coming. I saw our profits coming. And I knew if I was a short, all you do is what if. You just gamify this. And you just think if I was a short and I was in trouble, I would get people focused backwards on what has been happening, not forwards at what is about to happen. And so they get on you about cash flow. Last year this time, I knew that Q3 was going to be positive cash flow, and I ended up being right. And there were even kind of so-called apes who all they could talk about was cash burn, cash burn, cash burn, cash burn. And I was like, you guys, they're getting you focused on the rear view. We're cash flow positive. And I, ended up being right there. So here's the thing. They want you focused on the rear view. You look forward. That's why I'm kind of even just using, you guys have seen Jurassic Park, objects in mirror closer than they appear. That's what's sneaking up on Shorty. And then the forward view, we got Jurassic 4 next year. ScarJo's in that. That's going to obviously be huge. We got a lot of big movies coming. So last year, told you we had positive earnings and positive cash flow. This year, the box office is bigger and expenses are lower, and popcorn and candy and distribution have been rolled out. It's just easy to say. You don't even need me to prove it. You already know that we've improved even more. So if we were cash flow and earnings positive then, you know that we're even more now. And what's coming? We haven't even hit Star Wars movies. Yeah, we had Deadpool and Wolverine, but we haven't gotten Marvel kind of back into full flow. I told you we got Jurassic World next year. Big stuff coming. Yeah, I guess I'm getting ahead of myself. Since then, we've reduced debt. Rates have gone down. Depreciation and amortization is down. Rent has gone down. Don't sleep on that. Those fundamentals videos will show you what we've been paying in rent and how that is significantly lower than pre-COVID. We've increased our per patron revenue. We've added popcorn, distribution, candy. I've already said all that. And again, forward view, not the rear view, the forward view. 2025 starts getting even bigger than what you just saw. So if I'm saying we just made $80 million at the bottom line and it's about to get bigger, of course shorts want you looking back at 2022 or back at the strike we just had. You guys know that I don't tend to curse, but man, that's a lot of BS. And then again, and we don't even get Star Wars movies till 2026. Like this thing just keeps growing. We're getting bigger and bigger. You wait till Spider-Man 4 comes out. Whoo! I'll tell you what, in 2021, that was Q4, Spider-Man No Way Home came out. And even then, even in the middle of an industry that had not yet recovered, AMC had positive cash flows that quarter too, by the way. Go look it up. We did. Spider-Man is just ginormous. So, shorts have no hope at all. But the main thing that you guys know and I know and we're all going to accomplish together, we will win. Let's go.